Good morning to all traders and welcome to this Thursday's Market Insights video provided to you by Orbex. Today is the 2nd of April. We've closed a quarter pretty dramatically, to be honest, with huge declines, of course, seen in the markets due to the coronavirus. Yesterday, we've seen the markets being a bit on a risk-off environment as well, again, because Mr. Trump went out saying that the deaths in the United States could reach nearly 250,000. So that was taken badly from market participants. On the other side, we've seen in New Zealand, the government ordered the banks to halt the dividends, and that is, of course, had an effect yesterday, but is going again to have an effect into the markets. We've seen all PMIs yesterday came out in contractionary territories, all below 50. Some worse than expected, some better than expected. We had the ADP delivering a poor, very poor, actually minus. So there was people laid off pretty much. For NFP tomorrow, we should be cautious as well because numbers might actually diverge quite a bit. I want to go for the dollar against the Norwegian krona because I think we've actually got a very nice correction signal over here on the USDNOK. This is, of course, in the daily time frame. If we look at the cycle degree move over here, we had wave swap and 2, and then in the primary 1, 2, 3, 4, and 5 that ended up at the nearly the 126 extension around 1200 level, 12,000. That is, of course, the extension of waves 1, 2, 3, and 4. Right now, since we're still expecting cycle wave 3 to come through, because we've had wave 2, but we didn't have wave 4, the particular pattern suggests that we're going to get a sharp wave 4 for a correction, which means that we're probably going to get an ABC, okay, with the wave A looking likely to be done already. Now, the thing is that we could have an AB and a C that is going to end around the 9.94. This is the 61.8 Fibonacci extension of this move to the upside, right? However, because it's an extension, it's not a retracement level, I've also drawn, of course, the 4 and 5 Fibonacci. The 50% is at 9.87, and that is very likely to get there fairly soon, I would say, either for to complete the correction or for wave A. And then we're going to get a B or a 2, right? Excuse me, a B or a 1. So we could get B for a C continuation, or we're going to get a 1, and then a 2, 3, 4, and 5 to complete wave 5. Wave 5 will go around 14 level or so. Now, we've also got, though, this Fibonacci retracement over here. The 50 comes to 8.67. Now, in my opinion, okay, and just to respect structurally the markets, usually we're going to get a wave 4 that comes below wave 3, right? And it could even come down to wave 4. However, because we've seen the oil market taking a hit, right? I think we're gonna probably head a little bit lower for wave 4. Okay, so I'm expecting wave 4 to go anywhere between, let's say, 8.9 and 7.5. Now, in the intermediate degree, I think we're gonna get a bounce fairly soon, okay, for a correction, and then continue lower. Now, the other pair I wanted to look today, and since actually we had the New Zealand government deciding to halt dividends for the banks, let's go on the Kiwi against the Swiss franc, because as I said, I mean, I believe in the next quarter we're going to see the Swiss franc fairly strong, and that's due to safe havens. I see this in the daily degree, again, in the daily time frame, excuse me. I see this as 1, 2, 3, 4, and 5. I actually see that as a leading triangle, right? Don't get confused. This is an ABC, right, for wave B. And I'm still expecting wave C in the, there we go, in the cycle degree to take us, to move us lower. Now, the 100 Fibonacci extension of AAB comes to around 0.50, which is a very good like half a dollar, right? It's half a franc, sorry. It's a very good psychological level as well. Now, if we take into consideration that wave 1 and 2 extension, okay, the 161 of course was done. This is wave 3 very clearly, right, for a 5-wave move to the downside. Now, of course, we assume that this is going to be a 5 move to the downside, since we've got a 5 move in the wave A. Usually what happens is that wave 5 extends down to the 200 Fibonacci extension, right? So we expect actually wave 5 to end anywhere between the 53 and the 50 level, right? Which the 49.90 actually a very good chances as well to end this move to the downside over here, right? Now, we've had this leading triangle as well over here with waves 2, 3, 4, and 5 ending. So at this moment, we've seen a move to the upside. It looks like to me we're going to get a B, and then we're going to get another move to the upside for a C, right? So this area will be a little bit corrective, and then we start moving lower. But pay attention to this. If we start moving lower and we break below the 55, they're most likely going to continue lower for wave 5 immediately. This would be considered a very sharp correction, which is also good for the rule of alternation because this would be a little bit more elongated. But if that's not the case, then I would expect this area over here to last at least 7 months. So we'll be looking at probably the end of the quarter for this to break lower. Okay, so we're talking about medium and long term today because we just finished the quarter, and I think it's very important to add on our watch list opportunities that are going to give us very good risk to reward ratio until the end of this year. So thank you for watching, and I'll speak to you again tomorrow.